I think the most important thing about silver is being patient, and I think patient will be rewarded. And once silver breaks through $50, which is like the line in the sand, we could see fireworks in silver, and also the silver miners. I think they're looking really good as well, even though I focus on having physical silver as well, but silver miners, I think, are going to be a really good way to be exposed to this move. And yeah, they're showing signs of life.
Every financial market has its secrets, but silver's might be the most explosive. For centuries, it's been quietly fought over, not for what it is today, but for what it represents, real money that can't be printed. That battle, says analyst Mario Innecco, is entering its final phase. And if he's right, the endgame could rewrite the price chart in a way few are prepared for. The existence of silver as money is a historical fact that has constantly threatened central banks. For generations, bullion banks have relied on deliberate price volatility to keep the public from treating it as a serious investment. But with fiat currencies around the globe under unprecedented strain, Mario warns that the bankers' own game may soon backfire. Innecco has spent decades studying the manipulation of futures markets. When silver spiked to $30 in 2021, he wasn't convinced it was a real breakout. After years of grinding at that level, though, the technical picture has shifted. On the fundamental side, the supply deficit is impossible to ignore. Silver has run a shortage for 5 consecutive years. Nations like China and India are demanding huge volumes for infrastructure, technology, and green energy projects. Innecco calls silver one of the most undervalued assets in the world. China's role is especially critical. Its buying patterns can ripple across global markets, influencing price swings and even shaping investment decisions of mining companies. As Mario puts it, China is setting the pace for the dance. With silver still trading below its all-time highs, he advises patience. The key level is $50 once that line breaks. He predicts fireworks, with mining stocks surging in the frenzy. Still, his preference remains physical bullion. The silver market, he says, is shallow enough for bullion banks to push prices around with a few big trades. And history shows that when regulators finally step in, as they did with the Hunt brothers in 1980, it isn't to protect the investor, it's to protect the banks. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
If you remember well, back in 2021, there was the silver squeeze, and silver traded up to 30, and a lot of people were excited about that. They thought it was going to break out. I was a little bit skeptical because I've seen for over 20 years how the futures market can be kind of manipulated by the bankers. So yeah, we've been waiting a long time for silver to finally break above 30. And I think it looks really bullish. We had resistance around 35 a few months ago that we broke. And that's the technical picture. And right now it looks like 40 is the next target. And yeah, they're trying hard to keep it from going towards that level, but I think eventually it will. On the fundamental basis, I think that the fact that we have a silver deficit that has been running for like 5 years, there's not enough silver being mined and produced to match demand. That's very bullish, and the fact that countries like China and India need a lot of silver, not just for investment purpose, but also for building their infrastructure. Yeah, it makes silver, in my opinion, probably one of the most undervalued assets on the planet. If you think of where silver got in 1980 and even 2011, we're still not even there. Yeah, so I think the most important thing about silver is being patient, and I think patient will be rewarded. And once silver breaks through $50, which is like the line in the sand, we could see fireworks in silver, and also the silver miners. I think they're looking really good as well, even though I focus on having physical silver as well. But silver miners, I think, are going to be a really good way to be exposed to this move. And yeah, they're showing signs of life. Who they are, I guess it's the bullion banks, and they work for the central banks, basically. I think the central banks are involved, even though they don't hold much silver. And I think they're they don't like silver up so much because if you look at historically, silver, even up until the early 70s in some European countries, they're still using silver as money, coinage. And in the US until 1964, Switzerland till 1967, I think. In the UK, we got off silver a bit earlier. It was 1947 because the UK was bankrupted really by two major wars. But yeah, and I think they don't want the public to get involved in silver because it's kind of in our DNA and loads of words, well, words for money in different languages. Is silver. Like in French, it's argent. In Spanish, it's plata, and even the word dollar comes from the Spanish mil dollar, which came from the Joachim's Thaler silver coin. So I think that's why they're concerned, and a lot of times they also want to maintain the market volatile because that puts a lot of investors off. They want to make it so that it's just like a volatile commodity, and that was one of the strategies that they basically installed when they the let's say when the U.S. allowed gold to be legal again on 1st of January 1975. There's a WikiLeaks document uh, where the Treasury and the Department of State communicate with bullion dealers in London, and they say, yes, it's good that we're going to have a futures market for gold because it's going to keep the markets very volatile and it's going to keep the public from demanding physical gold. And it's the same thing for silver. And I don't think they're going to make it, though, because the debt situation is so out of control that I don't think the dollar or all the other fiat currencies have much time left, and I think they know it. These bankers, even though Ben Bernanke seemed to play dumb when asked what gold was by Ron Paul, he said it was a addition. So that's why they try to keep things like under wraps, under control. But the bankers might, you can't count them out. They might even reverse their short positions and go long silver. Who knows? Yeah, I mean, I worked in the futures market for like 20 years, uh, mostly government bonds and interest rates, but I got involved in other kinds of futures, and I can tell you that someone comes with a big order, they can move the price quite sharply, and especially in silver, because silver is not really a very deep contract, as deep as gold and other futures markets. So these guys know the price levels, the supports and resistances. And yeah, when the market gets too frothy, they'll come in and sell like 1,000 futures of silver, which is big. Prior to let's say the early 2000s, it was a bit more difficult to manipulate the futures market because all the trading was done on the floor and people could see who was doing what. You could see if JP Morgan or the broker that JP Morgan used was selling or not. But uh, the market went electronic basically by by 2004 or 5 or thereabouts. Futures were all traded electronic. So they can hide behind that because when you sell or buy on the screen, it doesn't show who's doing it. And the other thing they've done and they've been fined for doing is spoofing the market. That means you put a huge offer on the screen and then you pull it. But the reason you put the huge offer is to scare people off from buying, and it actually might trigger some selling. Yeah, the people in the bullion banks, they say that they don't really go short. It's all hedging, but I think, yeah, I don't buy that. And I think a lot of times they also front run their big clients. If a big hedge fund comes and tells a bullion bank, I want to sell 1,000 silver contracts, they'll sell as well. And then, I mean, when I worked as a futures broker, I always tried to work the orders so I wouldn't move the market in a prejudicial manner for my client. And that means, if he gave me a big order to sell something, I would work it. I wouldn't try to smash the price, but that they do. And they seem, back in 2021, that's what they did when we got up to 30. And even the head of the CFTC came out and said, well, we had to tamp down the demand, and yeah, they basically smashed the futures at the 30 level. And yeah, I mean, it kept silver from rising for like 3, 4 years, really definitively. So that's what happens. And it happens in gold as well. It happens in other markets too.
Since Nixon closed the gold window 54 years ago, the fiat system has unleashed an era of unchecked debt and financial engineering. That model, Mario Innecco argues, is now running on fumes. While a digital currency reset seems inevitable, he insists that any system meant to last will need the credibility of gold or silver backing. This is why the BRICS nations, led by Russia and China, have been aggressively stockpiling gold since 2022. The goal isn't to launch an attack on the US dollar, but to create a framework for independent trade in a post-dollar world. The outcome could be a multipolar currency system, ironically, which takes some pressure off the US by removing the heavy burden of being the sole global reserve currency. The economic context is shifting fast. As the United States wrestles with inflation, debt, and geopolitical uncertainty, the BRICS alliance is positioning itself as a credible alternative. China now settles nearly half its international trade outside of the dollar, a move that aligns with a broader trend. Around 80 nations are adopting local currency settlements for bilateral trade. Together, Brazil, Russia, India, China, and South Africa hold approximately 5,700 tons of gold, accounting for roughly 16% of the world's total reserves. That's enough to back their proposed unit currency with real commodity weight, offering a sharp contrast to fiat currencies backed only by political promises. Let's get back to the interview.
I mean that, the system is long in the tooth. Friday is the 54th anniversary of when Nixon closed the gold window or suspended the convertibility of the dollar into gold temporarily. And it's been a massive increase in debt, financialization, derivatives. It's all mushroomed so much that I think these guys know as well that you can't keep this going forever. And I think they do want to bring in some kind of digital currency. The Europeans are more into the CBDC. In the US, it seems to be more through the private sector and crypto. And I think crypto has been kind of an experiment. It's been portrayed as a grassroots movement to fight the bankers actually in their system. But now all the bankers and even the Trump administration, they're getting involved. So it's been hijacked, or maybe it was created by them to use it as a solution to the collapse of fiat. Yeah, and I think they do need gold and silver if they want to get back up and running, because if you just bring in not fiat, but if you bring in digital currency or CBDC with no backing, with just the same old, let's say, government debt backing, I don't think that will work. So they will have to resort to some kind of commodity money. And I think the BRICS countries, especially Russia, China, and other countries, they've been buying a lot of gold since 2022, and because they see the writing on the wall. I think BRICS is a response to the West's like imposition of let's say sanctions, tariffs, and yeah, to the control of the monetary system by the U.S. through the petrodollar, and also the EU with their sanctions, and especially with what happened after 22 in Russia. And I think I don't really think they're pushing, they might have some kind of currency. I don't think they will, though, because it's such they have such different cultures within the BRICS, different kinds of economy. I think what will happen is that they will have their own like trading system where there will be a common reserve that they will use to settle like trade at the end of the year or whenever. And by that, I mean, if Brazil has a surplus with China, uh, and Brazil's holding yuan, they might want to convert some of that into gold, or they'll just keep the yuan and vice versa. And it's just like cutting out the middleman. They want to cut out the West. And I don't think I mean, politicians, especially President Trump now, they've been quite aggressive in terms of what they say about BRICS. They say BRICS is anti-American, anti-dollar, but I don't think they are. They just want to be more independent and not have to be at the mercy of someone else's currency, especially if you're dealing with someone, let's say Brazil and China again. Why do you need to use dollars? Why can't you use the Brazilian or the Chinese currency? That's how I see it. And I think gold is going to be a very important part of that, because you can't really trust the BRICS fiat currencies either. I mean, look at Brazil, where I'm originally from. I think in the 70s and 80s, we had 4 or 5 new currencies. So it can only work if you go back to gold, because the dollar worked for a long time, because up until 1971, it was as good as gold. So I think that's what BRICS is all about. And I see going forward the whole world being kind of like BRICS. It's going to be a more of a multipolar world, as they say it. And I think it's even better for the US and the dollar, because to be the major reserve currency has a lot of advantages, but it has a lot of disadvantages as well, as we've seen in the last few decades. The country is up to here in debt, huge deficits. The middle class has been eviscerated. It's been deindustrialized because other countries have to earn dollars. So what they've been doing is trying to sell as much stuff to the US as possible to earn those dollars to function in the world. So yeah, I actually think it's a positive for the whole world, the fact that this is happening.
What's taking shape in the silver market feels less like a routine price cycle and more like the quiet prelude to a structural shift. The combination of persistent shortages, strategic buying by major economies, and a global monetary backdrop that's losing credibility is a rare occurrence. When a shallow market meets deep-pocketed accumulation, the result can be swift and decisive, leaving those who waited on the sidelines scrambling to catch up. Could this tightening supply and mounting geopolitical pressure be the spark that drives silver beyond its historic ceiling? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.